Graham Neilson is Chief Investment Strategist at Cairn Capital. Good to see you. Welcome to the programme. I'm wondering how much time you think that move yesterday has bought the politicians and policymakers.
Well, I think there's a number of stages that this particular stress in the markets needs to go through. We have bought, or they have bought the market time enough to listen to what we're going to hear out of the resolution of the PSI for Greece, which to me is another stage towards what is likely to be an eventual default. Call it what you will, but there will be a default out of Greece. And I think we need to hear a lot more out of definitely the ECB in terms of both rates and in terms of monetary policy generally. And I think we're going to hear more in terms of concerted action, not just on liquidity, but on policy generally, and that will take place over the next 3 to 6 months.
Do you think the ECB really needs to be acting even more aggressively, pumping much more money in, buying for much more bonds from some of these peripheral nations? Well,
I think that as with most of these policy actions, and I call them reactions rather than anything more proactive, there needs to be a particular level of stress before that happens. And I think what will take place is, it very much depends on what happens with the EFSF. If it gets ratified and if it gets pushed through, then that buys a little bit more time into the end of the year. If it doesn't, the ECB will be forced to buy even more and will be forced to expand its balance sheet. And I think some balance between those two is very likely.
And it's very interesting, isn't it? Because only 5 countries so far have ratified the ESFS. You can't see that happening anytime soon, or can you? Do you think the political will has changed now, that suddenly the politicians have grasped this and this will be pushed through? Because goodness knows there are some few countries out there that are not terribly keen on it.
And rightly so. Unfortunately, they have to be committed. It will take place over time. Most of these policy actions have not taken place in the right time or in the right time frame. Most politicians, and certainly the central bank in Europe, is behind the curve. But I think that it will take place, but there may well be some concessions. But even if it does take place, it's still not enough.
So you're investing money today, for instance. Where is money going? Where do you think, is there anything like a safe investment anymore? Is the risk returning, do you think? Where are you putting the money?
Well, I think that we are much more interested in looking at assets that are pricing in a number of factors. If they're pricing in a very deep recessionary environment in the periphery, then they become a little bit more interesting. If they are pricing in a very, very deep level of illiquidity in the underlying asset, that becomes more interesting as well. So the more reality, as far as we see it, in particular next year, 2012, being a negative growth year for quite a lot of Europe, especially the periphery, if that gets priced in, if we start pricing in much, much lower levels of interest rates generally, then I think some risk assets start to look interesting.
Because corporate bonds are very good value, one might say, out there at the moment, especially when you look at some of the corporations' fundamentals, the price ratio.
Yes, they are. I think obviously value is in the eye of the beholder, and I think value for us is going to have to depend on those negative factors being priced in. But certainly for Europe, Europe is pricing in a condition of the markets which is very similar to 2008, 2009. I think we still need to be patient. I still think we don't have a resolution as far as Greece is concerned, or the banking exposures to the periphery in general. So we need to move more towards that. We are hearing voices that are getting us towards that. The integration of the US Treasury Secretary into the discussions at the weekend is, I think, part of that, but we haven't actually seen you know, the real gist of what we're likely to see over the next 2 months. So patience is still a watchword. The markets are still very damaged. You need to tread carefully for now, but there is definitely value.
OK, Graham Neilson, really good to talk to you. Thank you very much indeed for joining us on Bloomberg today.